Greetings, we are from Group 10, which we are going to present about assessing the barriers to innovation in Sharia-compliant fintech product development in Islamic banking.
Assalamualaikum Doktor, my name is AMANINA. So I'm in charge the introduction part. So the introduction for our study is on this Islamic financial technology is involved the industry in about combination Islamic principles such as avoiding interest, which is the riba, and promoting fairness with modern technology to create ethical and inclusive financial solutions. For the background, Islamic financial technology is growing globally, especially in Malaysia, Indonesia, and UK, also the UAE. Innovations like digital banking and blockchain technology are helping transformations in financial service. However, the industry faces a challenge like high cost of compliance and adapting technology like blockchains and cryptocurrency to follow the Islamic rules. For the objective, the purpose for our study is to understand the challenge and find a way to support the innovations in Islamic compliant financial technology products, especially in the regulations, technology limitations, cost and the customer demands, and also the risk of non-compliance. The location of our study has a global perspective, but we focus on the Malaysia because it's a leader is Islamic financials with strong regulation and innovative like investment account platform. For the methodology, we use the literature review with reviewing a journal, case study, industry report. From this, we develop a framework and identify the challenge and propose solutions.
Literature review: opportunities in Sharia-compliant fintech. Technological enablers include blockchain, robo-advisory, P2P lending, and the mobile wallets. While the emerging trends, halal investment platform, digital zakat or wakaf, management system and crowdfunding solution are gaining traction, and the advanced technologies like AI have the potential to automate Sharia compliance processes, significantly reducing operational costs. Challenges in Sharia-compliant fintech include regulatory constraints. When navigating dual compliance with financial and Sharia regulation can be complex, creating scalability issues. The process of obtaining Sharia certification is both costly and time-consuming, often delaying product launches. And additionally, regulatory inconsistency across different jurisdictions force companies to tailor products for each market, increasing operational costs. The next is lack of skilled talent, where the shortage of professionals who are expert in both fintech and Sharia compliance, which limits innovation, and academic programs that integrate Islamic finance with technology are also scarce, further widening the skills gap. And to address this, we need more upskilling initiatives and stronger collaboration between academia and industry. The third is the cost of Sharia compliance, where integrating technologies like blockchain requires a high initial investment, making it challenging for smaller companies. Training staff and hiring Islamic finance experts also add significant costs. And finally, licensing fees and regulatory capital requirements create scalability issues for fintech startups.
Next challenge in Sharia compliance is technological limitations. Technological limitations involve inadequate digital infrastructure, especially in rural areas. Furthermore, there is a lack of technical know-how in Sharia board members and Islamic banking customers. There is also the lack of Sharia-compliant technological solutions. Next is the customer demand. Customer demand involves the growing demand for Sharia-compliant financial solutions and is affected by the increased availability of digital platforms. The limited understanding of customer needs is a factor that increases this challenge. Finally, the perceived risk of non-compliance. Customers perceive fintech as non-compliance due to the lack of sufficient legislation and conflicting regulations in different jurisdictions. Furthermore, there is also the lack of transparency on how the new technology behaves. This all leads to the lack of trust in Sharia compliance in fintech.
My name is DONNA LOSANTAS, and I'll be presenting about conceptual review. So as you can see the table here, these are the study of barriers to innovation in Sharia-compliant fintech product development in Islamic banking. As you can see, the most mentioned here is the perceived risk of compliance and customer demand.
Gap is on the regulatory constraint. Regulatory constraint present a major barrier to innovation in Sharia-compliant fintech product development due to varying interpretation of Sharia principles across jurisdictions. This lack of harmonization complicates the standardization of fintech solutions and increases the compliance cost for fintech firms. Next, barrier is lack of skilled talent, but in minor barriers. The shortage of professional proficient in both fintech and Sharia compliance limits the industry capacity to innovate. The lack of dual expertise increases the reliance on expensive consultants, slow development, and limit the industry capacity to innovate. Then, cost. Also, minor barriers. Some studies suggest that fintech involves significant upfront costs before delivering any economic benefits. This can push fintech to the back burner, especially when resources are limited.
Next is the technological limitations. So the issues that have to be addressed is the digital infrastructure, which is critical to ensure consistent adherence to Sharia principles. Security, because a strong cybersecurity and data protection will build trust and uphold Sharia compliance. And the third one is digital literacy, because a low digital literacy and limited customer awareness technological limitation. And the last one is the public understanding, because if there's the skepticism about the Sharia compliant fintech will hinder the market growth. Next is the customer demand, which driving innovation is to promote ethical, user-friendly solutions aligned with Islamic principle. So within the customer, it is important to fostering trust, enhance physical inclusion, transparency, and trust while adhering to Sharia guidelines. But within this customer demand, there's the challenges to meet this, which is to they have a limited customer awareness, high compliance costs, and inadequate infrastructure. Next is perceived risk of non-compliance, which is the main challenges here is the complex regulatory frameworks and insufficient supervision. So the technological solutions here can be made by looking at AI, but it also face adoption challenges. And lastly is the ethical framework, which is integrates compliance, ethical values, and financial inclusions. So from this, we can see the overview of the conceptual overview.
Good day everyone. Let me share the conclusion of our research on the challenges in Sharia-compliant fintech. The main issues include different regulations that make it hard to grow globally, a lack of skilled people in both fintech and Islamic finance, and the high costs for staying Sharia-compliant. On top of that, weak technology, low digital skills, and lack of customer trust are holding back progress. To solve these problems, it is important to unify Sharia regulations, train more experts, and use technology like blockchain to reduce costs and make the process easier. Educating customers and building their trust is also a key to boosting adoption. In short, by working together, regulators, businesses, and educators can help the Islamic fintech grow and reach its full potential, creating a more inclusive and innovative financial system. Thank you so much. Thank you for taking the time to listen to this presentation. Your attention and interest are truly appreciated. If you have any question or points to discuss, I'll be happy to address them in the comment section. Once again, thank you, and I hope this provides valuable insight into the topic.